AVV Nation, all of YouTube out there, my name is Patrick France, Senior Instructor here at VectorVest, bringing you our first piece of 2022. Happy New Year's first and foremost. Today, I've got some technical analysis that I want to go over with everybody out there that could greatly improve the performance of your portfolio. We're going to be looking at some trends that we've noticed here at VectorVest over the last few weeks and want to make sure everybody out there is in tune with what's going on. So that way, as always, you never get caught off guard with what's going on in the market and can help add some serious gains to your portfolio. So if you're ready to see what I'm talking about, make sure, as always, smash that like button, share this video with all your friends, family. Make sure if that button down in the bottom right-hand corner says subscribe is red, make sure to click on that button as well, because all that helps us out with the YouTube algorithms. And let's go ahead, jump right into it here today. All right, so welcome back. So I want to start off here with Investopedia.com talking about divergences. That way, in case you're somebody who's new to the channel or new with my style of investing, I talk about bearish and bullish divergences quite often in our jockey club and our live streams and a lot of other places. And if you're not familiar with that already, I want to start off to make sure that we're all on the same footing. So first off, what is a divergence? A divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergences warn that the current price trend may be weakening and in some cases may lead to the price changing direction. I have found over the years that divergences can be an extremely powerful tool of technical analysis to add to your portfolio because they can help you get in earlier when the market downtrend starts dissipating, or help you protect your profits earlier when the market starts to slow down after a nice long uptrend. And from my personal experience, I find about 75% of the time when a breakout from a divergence does occur, that they lead to some explosive gains, whether it's going up or down. All right, so I want to come down here and give you guys a little bit more insight on divergences, and then we'll dive into the graph and see exactly what I'm talking about here. So scrolling down just a little bit here, giving some of the key points that Investopedia gives to make sure everybody's up to date. Divergences can occur between the price of an asset and almost any technical or fundamental indicator or data. Though divergence is typically used by technical traders when the price is moving in the opposite direction of a technical indicator, positive divergences signal price could start moving higher soon, and it occurs when the price is moving lower but a technical indicator is moving higher or showing bullish signals. Negative divergences point to lower prices in the future. It occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Divergences aren't to be relied on exclusively, as it doesn't provide timely trade signals. And what this means is that if you are following a divergence, you want to have a plan in place, as always, a systematic approach, if you will, to know when that divergence is coming true or when that breakout or that trend change is coming into play. So that way you can jump on board early, which we'll talk about a few different ways just in a few moments. And then lastly, divergence is not present for all major price reversals, and it's only present on some. These don't occur all the time, but when you can spot them and they do occur, they can lead once again to some amazing profits to add to your portfolio. So coming down, what does a divergence tell you? A divergence in technical analysis may signal a major positive or negative price move. Well, recently the market has been moving lower, so we're looking for a major positive move here in the market. It occurs when the price of an asset makes a new low, while an indicator such as money flow or any other indicator out there starts to climb. So now that we have a good example of this, now we have a good idea of what a divergence is, let's take a look at the graph and see how we can put this to use right now in the current market conditions. So I'll just jump over here to our market graph. And what we're looking at for anybody new here is the VectorVest composite at the top shown in candlesticks. And if you're not familiar with what the VectorVest composite is, it's an arithmetic indexed average of over 9,000 stocks that we track each and every day here at VectorVest. And we feel this gives us a better representation on what's actually going on in the market, because it's not just tracking a small subsection of the market, such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's tracking 9,000 stocks all into one. And if you want to see this on a regular basis, click on the link down in the description below, sign up for the trial, and you can get access to this immediately. And then what I have down here below that is the MTI, or the market timing indicator. Now, the market timing indicator is looking at the underlying trend of the market. It's cast on a scale of 0 to 2 to keep it easy for people out there. So it oscillates around the 1 line being neutral, and anything above 1 would indicate the underlying trend of the market is up, and below 1 would indicate that the underlying trend of the market is down. So no surprise, ever since about the middle of November, we've seen the price of the VectorVest composite along with the overall market continuing to move lower here. And just recently, ever since about the beginning of December of 2021 until now, we've had a series of lower highs, also lower lows. By definition, putting us in a downtrend. But as I mentioned earlier, a bullish divergence occurs when the price is moving lower and an oscillator or a technical indicator, which we're using the MTI, which has historically been an extremely powerful indicator to use, is starting to actually move higher. So comparing that first low we hit back around the beginning of December 3rd to be exact. If you notice over there on the right, the MTI was at a reading of 0.59, and then all of a sudden, market bounced off, came back down, hit a new low on the 20th of December. Where's the MTI at? 0.62. Now, we took off one more time, hit a lower high compared to this high here, and are hitting a new low as of right now, at the time of recording this, as of today, and the MTI is actually at a reading of 0.67. When I first started showing this, even at the lowest point here, the MTI never got close to the low that we saw here on the 20th of December at 0.62. The closest it got was about 0.64, 0.65 if I recall correctly. So, and now, at the time of recording, what are we seeing? Price action here today. The market opened up blood red. We saw all the major indices starting to tank right out of the gate here this morning. But about halfway through the day, the markets are starting to recover. When you see this tall tail on the lower end of a candlestick, that indicates a lot of buying pressure coming in. A lot of people coming in and potentially seeing this price point that we're at in the market as a good buying opportunity and giving us more upside potential than downside risk. So as an investor mindset or investor sentiment, this is definitely a very bullish thing that we're noticing here. But to demonstrate it out there for everybody who wants to see more of a visual representation, we'll go ahead and use some lines here. So what I'm looking at is a set of lower lows here, but at the same time, a set of higher lows with the MTI. Now, as I stated before, just because you can spot a divergence doesn't mean it's going to come true the next day or even the day after. You always want to have a plan in place, and you want to know when to take advantage of it and when that bullish or bearish divergence gets invalidated, and so therefore you can play the market the other direction. So with this, what we're looking for, these higher lows with the MTI. If the market continues to move lower, which could very easily happen because nobody has a crystal ball, nobody knows what's going to happen the next day. But if it does break through this trend line or this higher trend line, then that would indicate that the bullish divergence that we're noticing here is invalidated and that there is a lot more downside risk potentially in the market to come. So this could be something, if you're not already in one way or the other, if you're just getting started in the market, wait to see how it handles this trend line. If we bounce off of this trend line, start to move higher, and maybe get some bullish candlestick formations to come, that could be an early indication that you could start jumping back in. So this gives us a great indication to know where we're at right now. So that way you guys out there can keep an eye on it and you can profit from it regardless of which way this market goes. Either the bullish divergence comes true and we get an early entry to take off on a great, amazing bull run in the market, or we break through that trend line and that tells us the market still has a lot more downside risk. And therefore you could either short stocks or buy contra ETFs to hedge yourself. Or if you're an options trader, you could also potentially buy some puts as insurance on your positions. Whatever suits your personal investment style the best is the way you'd want to approach that. All right, so now that we have an idea, we know what's going on, what are some potential signs that we could see from a candlestick perspective that would give us an early indication that the market has reached a bottom and we're starting to see a new uptrend forming? Well, a great free source out there is a website called candlesticker.com. Let's go ahead and take a look at that together. So I'll come here and go pull up the internet one more time, jump into Candlesticker, and once again, candlesticker.com, you can click on bullish patterns at the top, and it gives you a wide list of different candlestick patterns and an image of what they look like. So that way you can become more comfortable reading them and be able to spot them easier as an individual trader out there. So one of the first ones, bullish hammer. If the market continues to rally, since we still have some more time in the market here today, the market continues to rally, we could potentially be forming a bullish hammer today. Too early to call at the time of recording this, but every single night we do a quick recap of what's going on in the market. And if by the end of the session here today, we do form that, you can rest assured that we will highlight that in our nightly update for all of our subscribers out there. So a bullish hammer, just for anybody that's brand new to candlestick patterns, is a pattern that occurs at the bottom of a trend or during a downtrend and is called a hammer since it is hammering out a bottom. It's a single candlestick pattern that has a long lower shadow and a small body at or very near the top of its daily trading range. The other one could be a bullish belt hold. Don't typically see this too often. Another popular one are the bullish engulfing and also bullish harami. So a bullish engulfing pattern is characterized by a large white body, as you can see here, engulfing a preceding smaller black body or a red day or a down day, as you can see here, which appears during a downtrend, which I think we can all agree on. That's where we're currently at in the market right now. The white body does not necessarily engulf the shadow of the black body, but totally engulfs the body itself. And then the bullish harami, which is just pretty much an inverse of a bullish engulfing, is when you have a big red down day, as we had today. Luckily, we're coming back a little bit right now, but if the market does continue to move lower, closer to the close, and we see a sell-off going into the close, we could finish off with that big red down day like we see here with the black candle. And a bullish harami consists of a black body or down day and a small white body that is completely inside the range of the down day or the black body. So this whole candle, the small up day, is all within the range of the black body or the big down day. If an outline is drawn for the pattern, it looks like a pregnant woman because the Japanese word harami is actually translated to pregnant. So that's where it gets its name, pregnant woman. And then coming down here, just make sure we see anything else that we want to make sure everybody's aware of. A bullish doji, so big drop in the market, but once again, seeing a nice rise, a nice tall tail on the bottom of that down day's candle. Could potentially see one of those. And the doji pretty much just means that the open and close prices are the same by the end of the day. And so if you've made it this long in the video, let me know. Have you ever used this website before? If so, what are some of your favorite patterns to look for that you personally use? I know myself, I look for engulfing patterns, haramis, shooting stars, those sorts of things. But there's a wide variety of candlestick patterns out there that could suit individuals' own personal preferences, and everybody is different, so find the ones that you're most comfortable with. But these are just a few that I'm personally going to be looking for as we continue through this week in the markets. So jumping back into the market timing graph one more time here, as we can see, we're still picking up nicely. If we can get close to the upper 25% of the range here today, that could definitely give us that sign for that bullish hammer. And I would love to see that, especially with this divergence. And that's why I wanted to bring this to you guys today, because as always, our number one concern is to help our subscribers and help retail traders out there become financially independent through the use of the stock market. And if you can catch these trends early, this can definitely help you meet that goal. So as always, it's been my pleasure. I hope you all are doing well. 2022 looks like it's going to be a great year. I'm excited to see you guys every single Thursday and all of our live streams and all of the content that we have here. So best of luck for 2022. And until next time, toodles.